are hopefully coming out of one of the worst economic roller coasters of our nation's history. The collapse on Wall Street, the housing market plunge have everyone worried about their retirement nest egg. But no group is as focused on the future as the baby boomer generation. For many, retirement is now not an option as their stock and real estate nest eggs have dwindled and coveted jobs have disappeared. Here to help us put our feet back on the ground and give us some perspective on where we're headed next is Patsy Nodilo. She's the CEO and Portfolio Manager for Pathlight Investors. Nice to see you.
Nice to be here. Thanks for having me.
Help us kind of understand the baby boomer mentality. Who are these people and how do they invest?
You know, baby boomers, for the most part, have gone through some really successful periods of investing. The 80s were tremendous, the majority of the 90s, so there was great returns in investing in the markets, and people got rather complacent about expecting these very high returns. And also, I think baby boomers generally are very comfortable not only with risk, but with increasing leverage. So they incurred additional debt as time went on.
Yeah, these are people who are used to seeing big gains. So they've got huge houses, lavish lifestyles, big vacations. And when all that starts to come to a screeching halt, then we've got a real serious issue with a good majority of our population right now.
That's true. Yeah. That's true. And that's, you know, everybody is well aware of all the things that happened to so many people. And just being a little bit better about maintaining a reasonable lifestyle and paying attention to what your investments are doing for you.
When you really look at them as well and look at just the savings that the baby boomers have done, you've got a lot to learn there. Where are they on that?
You know, most people, once they hit 50 or older than 50, really start panicking or thinking, gee, I don't have enough money saved. I've got to do a better job. And so they start trying to play catch up, and it's a hard thing to do, to catch up
when you're
if you start late.
So let's look at some of the things then that the younger generations, those 20s and 30s and even 40s, could learn from the baby boomers as we kind of move forward. And what are some of those things that are important to remember?
You know, I think if you save early and often, I mean, I just think that's really the key. The younger you are when you start to save, the better you will be when you retire. And you need to have a 401k. If your employer offers a 401k, you need to participate, and you need to max out those contributions if you possibly can.
I think that's the important thing, or max it out. It's free money that your employer is giving you. It's like you just gave yourself a raise if you can max out your 401k. Also, I think you make a great point in investing in what you know. That's really important.
Yeah, we're fanatical about that at Pathlight, in that we want clients to make investments in things that they understand, that we're paying attention to. And
so don't go for that next big thing.
Exactly.
Yeah, just kind of stay the course.
And keep it kind of simple, and then you'll know what your risk is. And also, a lot of people did not during the bad times.
I think the fees can get people too if they don't understand that.
That's true. That's true. There are a lot of fees built into mutual funds that people are not aware of. And paying close attention to the fees that you're getting will get you a little further ahead.
Okay, let's talk about compound interest, and really just being slow and steady wins the race. And you've got a great example here of, if you are 20 years old and you save $200 a month until you're 65 years old. Now, $200 a month, people can do that if they try, at 8% return. At 20, by the time you're 65, that number is staggering, $970,000.
Isn't that amazing?
Yes.
Isn't that amazing? But look what happens when you don't start until you're 40.
Yeah, $183,000.
Yeah.
Still, though, good to start at 40 if you haven't yet, right?
Exactly. But you probably would need to save more than $200 a month.
Yeah, absolutely. Patsy, what should people do who are out here kind of gripped in fear? Is there any safe investment out there?
You know, there's no such thing as a risk-free or fail-safe investment, because all investments carry risk. But I think if you focus on quality, high-quality things, we prefer high-quality individual stocks that pay good cash dividends. That's a good thing. And I think people sometimes forget that even cash in a CD in the bank has a risk because of declining interest rates.
Okay, very good. Patsy, nice to have you here. We could talk for half an hour. I've got a lot of questions.
Nice to be here. Thanks very much.